call up, and that's what tax professionals want. You know, it's just so much faster. I mean, I know it takes some effort to get into my FTB, but once you do it, I'm sure you'll be glad that you did, because we answer, I don't know, literally millions of calls a year, and a significant number from tax professionals requesting that payment information. So for a while, 2 years in a row, we were actually sending out notifications of payment and credit information to business entities. And we did that on a trial basis, but unfortunately it didn't pay off for us, because we were hoping it would reduce some of the telephone time for us. Calls actually went up. I don't know why, but each year we send out, 1 million notices to various tax professionals. I'm sorry, not tax professionals, but business entities, so they could share it with their tax professional in doing the tax return. I need to interrupt for a second. Is someone doing the admitting? Bradford, are you able to do that? You're muted, so because I've got a message here that says somebody's waiting.
Do you mind admitting, because I cannot admit? Sorry.
Okay. Hopefully it's not a Zoom bomber.
No, Mark, for now, it's only you who could admit.
Okay.
Sorry about that.
Yeah, no worries.
Jen
No
just
worries.
joined. Yeah. No,
Yeah.
she's not a Zoom
Okay.
bomber. No.
So anyway, that, in addition to getting that payment information, if even with the minimum or the lesser access, you can get you can do the chat, where you can also get payment information, and you can get recent notices, so up to 12 months old, so that if you do need to call, you have access to that notice and you can get assisted with that notice. And I think that's what I want to say about that. So we've got an agenda here today because we're supposed to have one, so you've got one. Now you've met your criteria for your CPE. And at this point, I like to offer, if you want to just ask some questions, you're welcome to do that. I do have a script and a presentation, but I am used to answering various questions, whether I can get you an answer right away or it's something I'll have to look up and get back to you. That remains to be seen, but feel free to ask a question, especially if you have a question on any of the topics that I'm bringing up. So we have an abbreviated version. Oh, and by the way, since I'm doing the presentation, what I can see is the PowerPoint. I don't see what's in the chat, so you'll have to kind of just step in and say you have a question, or if somebody else can monitor the chat, they can let me know if there's a question. At any rate, so we've got our Advocate's Office. I wanted to cover just real quickly some updates we have to that. We've had some changes over this past year, including our taxpayer advocate, Susan Maples, moved on to another position. So Chris Smith has been our acting advocate, and he will be our acting advocate at least through the end of the month. My understanding is that sometime next week, I wish I was able to announce it to you now, but sometime next week, we'll have our new tenured taxpayers' rights advocate at the Franchise Tax Board. As of this moment, though, we do not have that information, unfortunately. At any rate, so some of the changes that occurred, we actually brought some account resolution specialists within our office. Now, for many of you, you might have thought that that's the way it had been, and it wasn't. We actually would have to reach out to account resolution specialists to assist us. Well, now we have better access to them, because one of the changes Susan wanted to make before she left the office, or actually it was while she was working, and then of course, as you all well know, opportunities present themselves. And she took advantage of that. But she wanted to make sure when tax professionals were attempting to contact us, that they were actually getting a hold of the taxpayers' rights advocate. So here's your different avenues to contact us. You'll note that the 800 number, that's the only number that's the same from last year, and that goes to our executive services section, and they can help you when you just need to escalate a problem through regular channels. Maybe you need to get it hurried up, or maybe the last person who was handling your case hasn't got back to you or something like that, then they can help you out. But if the normal channels are failing, these are your other avenues. And on the web, you've had that option for a while, and that's one I recommend, because it just, all the information's right there. You don't have to send out a separate email and worry about who it's going to or anything. But if you want to send an email, we do have a brand new email address. It's called ftbadvocate@ftb.ca.gov. So you have that avenue. The fax number right below it is brand new. So you can use that to send us. If you download the request form, I think it's FTB 914, request for advocate assistance. You can do that and then fax it to that number, or you could call us if you need some, information about, maybe an approach to the problem or something. But, because of COVID-19, the 2550 number, you'll have to leave a message, and then we have people check it daily, and then we'll get back to you. And then, of course, we have, U.S. Postal Service mail ID, or a mailing address that you can use. Again, this is a new address, and it's going directly to our mailbox. We see the mail, and we can respond to it. So what I like about our new processes, now on the web, that's the same process as it's been internally, but these others, except for calling us, it creates a case unit in our system right away. So that means it's documented, and I really like that, because then it's not lost on somebody's desk or lost in the mail or whatever. But even if it comes through the mail, we scan and shred everything that comes in the department. So scan it, and so it gets scanned and it gets documented, and then from there it gets put into a queue, and then it gets sent out to various areas of the department. Of course, if it says advocate on it, it's going to go to our in basket, and then it gets assigned to us. Somebody takes charge of it, it gets assigned to us, and then there's accountability, and you can expect us to respond to you. Usually we're 24, 48 hours, something like that, once we get it. But if we don't get to it, it starts off in green. We have like a dashboard. It starts off in green, and then it goes to yellow, and then when it's really bad, it turns red. And that's when somebody's calling me at my desk and saying, "Hey, Mark, you better get to this." So it's out there, and folks can see it. So I just really like the idea of that accountability and that ability for you to get directly to us. So that's kind of an update on our office. And of course, if you have any questions about what our criteria are, basically it's when somebody's in crisis mode. We're a levy, a lien. You've been unable to resolve something by trying to work with somebody through it, or you just the timelines are too long. You've waited more than 6 months or your client has waited more than 6 months to get a refund, and there's no notification from us at all, let alone notification of an audit or something like that. So those are the times when you can call us. But we have that information on our website, and just about everywhere you go in FTB, you can either start from the homepage, but we're learning that some folks are coming directly in from Google searches, and they'll go to the page that they want. But you can go to the FTB website, and our search engine works pretty good, but a lot of the stuff is just at the bottom of the first page. And so our taxpayer advocate services are there, what we call our newsroom, our wait times, all that stuff's on that front page, and that can assist you in your expectations of how easy it might be to get a hold of us if you're looking at the wait times. Well, the Taxpayer Advocate Services, of course, you click on that and see what we can provide, but I've given you a brief summary of what that might be. But our tax news, which I'll probably get to in a slide or two, that you also access from the front page. There's a couple more clicks, but you'll eventually get there. Anyway, let's move on. Oh, lo and behold, we're talking about tax news. What I like to do is actually take a clip every month and put it into my next presentations for the following month of what's going on at FTB. And this is literally I took the table of contents, did a screen print of it, cropped it out, and threw it into my presentation. So this is what's new for filing 2020 tax returns, resident state tax filers list, dependent exemption credit, with no identity. Oh, that sounds very odd. Actually, I will talk about that topic. And then some information about the payroll protection program. So we've been providing information. I know that payroll protection, I keep calling it payroll. It's the Paycheck Protection Program. There we go. PPP. That's been a topic on folks' minds. The 1099 NEC, or non-employee compensation form, that's been on people's mind. We had an article in Tax News in January. So it's just our monthly newsletter, and if you give us your email, better yet, just go into FTB where you will have total control over it, and you go to the newsroom and look at subscriptions lists. So you can look at tax news if you want, or go down below that and it says subscriptions. You put your email ID in there and then you select whatever subscriptions you want. Tax news is one of the subscriptions. So it's your complete control. You can subscribe, unsubscribe, or just go into tax news and look at it periodically. So that's available to you. And other than this, a couple times a year, we talk about the current legislation that's coming out periodically. There'll be an FTB notice that comes out, and it'll feature that usually with a link to the notice. And then the notices are good because they will discuss various issues and provide the authorities for our decision-making process on that particular notice. So it's a good idea to keep track through tax news. And then sometimes you can just go to FTB if you have a question on a notice. You can just search notices and find it there. So we also provide news flashes infrequently. We're not trying to market anything. We may do on average 3 to 5 a year. And so it's just when we think that there's an issue that you need to address as a practitioner, we'll send out, because we have your email address, we'll send you an alert, and then direct you to read something. For example, COVID-19 came and we put something out there, especially about the timing of payments and return filings. And I'll probably talk about that coming up soon too. Okay, oh, well, there you go, COVID-19. So this is just to kind of give you an idea. So last year we did have that delay, suspension, extension, whatever you want to call it. But in March, we were all in the lockdown. And as a result of that, we had changed our payment and filing requirements to move to actually June 15th. And then the IRS came out with some with their guidance on filings for 2019. So we conformed to that. And so 7/15 was our standard filing date for that year, as well as payment date. What was pointed out to me, though, just recently, and I had no idea, but from April 15th to July 15th, if payment hadn't been made in that time, there was no penalty, but interest was charged, because interest always gets charged. And apparently that was in the fine details. I learned that from one of our CPE partners out there in the private sector. And I learned that this week, and I thought that was interesting. For most people, it's going to be inconsequential. I don't think we would even bill for the difference. But if it was a client with some pretty big numbers, it might be a couple few $100. Anyway, I put in here because I never know whether our offices are open or closed, depending on whether we're on lockdown or not on lockdown. They can be open, closed. Anyway, for right now, they're actually open if you need to get to them. And you would do that by appointment only. So I recommend, if you do need to make a field office appointment, you'd probably have to go to Oakland from where you are, is to go to the FTB website and search FTB field office, or not field FTB, but field office appointments, and you'll get to it. And what you do is you wind up sending an email to make arrangements. Now, what we're hoping is in the next, I don't know, future, next year or so, that we'll get to a point where when you're done with that experience, you'll actually know when your appointment is. Right now, there's an iterative process to determine when that appointment is, but you'll just go to the website and figure that out. So as far as collections go, yeah, they changed during this period of time from March through July, but we're still being affected by COVID-19. And so as a result, the collectors have been asked to at least be, more compassionate and more lenient if they can, with regards to placing a temporary hold on an account, making a payment arrangement, maybe when it's outside the normal parameters, with their and then allow the offer and compromise. Now, when you get to offer and compromise, the hardship, a release of a lien or a levy, of course, there's going to be a lot more work on the taxpayers or your part to support that, but they're asked to be more considerate and offer it as an option. And so those are kind of what we're going on with collections. Let's go in quickly into some legislation. And it's AB 85. That was one where it had quite a few different items and differing dates. So if you'll notice in the first line, it talks about the year 2020. So the filing period is 2020 through, or not filing, but the tax year is 2020 through 2022. It limits the amount of allowable business credits to $5 million. So if you've got a company that has more than that and could take advantage of it, it will be limited to $5 million. And within the statute for those particular business credits, I want to say it's, I better not even say it. I think it's 17037. So it's in that statute code. There's already built in the extension of the carryover when the credit is limited. So that's built in there. Whereas when I'm talking about the film credit carryover period, that had to be separately stated, and that's the only reason why it is. So that's also limited under the $5 million business credit. But it separately stated is the statutes that allow the extension of the carryover period. And then, of course, our NOLs have been all over the place, being restricted, and it suspends those from 2020 to 2022 for those in excess of $1 million. So taxpayers with income in excess of $1 million, they'll have a suspension and then extended the carryover period. One area that's a little bit different because it's 2021 through 2023, and it makes sense when you think about the first year of an LLC, an LLP, or an LP. trying to file its first year. Well, a corporation over the past many years has enjoyed the the benefit of being able to waive that first year tax. Well, this is to put these other entities on the same playing field. And so if they're registered with the Secretary of State, then for the years 2021, and they're a new corporation or a new entity for that any one of those 3 years, then they can waive the first year tax as well. It'll be interesting to see what would happen in 2024, because again, the corporation has been always able to, not always, but in recent years has been able to do this with no limitation. So will these other business entities be able to continue it? Hopefully so. And then there's some clarifying changes to the healthcare mandate. So the first item here, AB 276, this is just to conform with the Tax Cuts and Jobs Act with respect to the loans from retirement plans. And so previously, when someone took a loan out, they could treat it as just that, a loan for federal purposes, but there was a difference for California purposes. And it was treated as a distribution subject to income tax and penalty, so if it was an early distribution. So now it can't, we're on the same page with the IRS, and so it would just be treated as a loan, providing it meets all the other criteria. Okay, so AB 1525, that's the financial institutions in cannabis is how I classified it. But basically, and it's not really a tax issue, but it is a public accounting issue. So within that statute, what it does is it describes or defines financial service to include public accounting. And so this law, for California purposes, doesn't make it a crime or exempts from criminal activity those financial services when dealing with a business that's listed as a Schedule I for federal purposes. In other words, if a business is registered with the state of California as either the grower, the manufacturer, or the distributor of cannabis, under our laws, public accounting considered a financial service would have previously been illegal. Now it is legal to do. So for California purposes, I guess you can just open the floodgates and enter all of these various cannabis businesses into your practices. It opens it up for you. Doesn't say anything about for federal purposes. So it'd be interesting to see, if this law really, how much it changes things. So 1577 is the non-recognition of the PPP loan forgiveness. And so California conformed to the Federal CARES Act as it was originally written. And then along comes December, and the IRS it's not necessarily the IRS, but the federal government provides new guidance on it and allows expense deductions as well. So for California purposes, we don't conform to that part. So you can don't have to recognize the forgiveness of debt income, but you cannot take the deductions. So that's for California purposes. It's a difference between federal and state. Now, is it AB 80 or 81? AB 80 is a new it's a new bill out there, just introduced or just amended, that would allow the expenses limited, but it would allow some of the expenses as well. I think in their statute or in their bill, it's not a statute yet. So we'll see if it goes anywhere, but it limits it to $150,000. So they're kind of keen in on the small business ones who had PPP to potentially do that. But, you know, it's so early in the game, it's hard to say where we'll go with that as a state. Okay, so I need to check something here. All right, okay, good. AB 2660, this is the group non-resident return, will now allow non-resident aliens. So if somebody lives here, has a filing requirement, can now, if they're getting it from a business entity that could file a group non-resident return, then they can be included on that return. It's kind of a win-win for California because they're getting the tax at the highest rate, and they're getting a return for somebody who is a non-resident alien who's living in California. So whereas maybe they wouldn't have even gotten a tax return before, they get it. And then for the person, the member or shareholder partner who's being filed on behalf of them, it gives them peace of mind, at least knowing that that's not going to be an issue for them. So AB 3372, that's electronic withholding orders. That's pretty self-explanatory, but it's the water's edge election in doing business. And believe me, it's just so odd that these two are together, but they're in the same bill, and then they were made into law. The water's edge election. So if you have a business that has multiple members filing with Unity, then there's other members and they make a water's edge elections, and there's other members that are in that group that maybe don't have a filing requirement for California, so they're not included in that election. If by chance they decide they're going to do business, or even by happenstance, if they're going to start doing business, what this change allows is that other member of the unified group to join in and file as if they had always been part of that water's edge election. So previously, it would have been a technical termination and revoked that whole water's edge election and caused a big kerfluffle. Well, what this law does is it cleans it up for them so that they, if now they have a filing requirement because they're now doing business in California, then it doesn't revoke that election. So if you have a client in that situation, I'd recommend reading AB 3372. Okay, so I got ahead of myself, I think. Yeah, okay, so now we're at SB 934. If you have exempt organizations, the good news is there's no more filing fees. So the initial organization fee or the annual fees, they're no longer required. So that's a handy thing if you do some of those returns pro bono or otherwise, no fees. And it's just better for everybody, because us keeping track of that and then changing it from a $10 to a $25 fee, it just costs us more money too. And we're happy that this change has been made as well. Okay, so AB 93, there's kind of a progression here, though they're not completely related. AB 93 allows the use of an ITIN to establish eligibility of income individual for qualifying dependent for EITC. So it was specific to the qualifying dependent for the ITIN. So, and that was passed around the time of the budget, so around late June. And then along comes later in the session, AB 1876, because they wanted to expand EITC, and what it did is it allowed the ITIN starting in 2020, it started allowed the ITIN for all the parties to that tax return. So a taxpayer, the spouse, dependents, so they can all use an ITIN for California purposes. And then we have AB 2247, which then allows alternative identification for those who are ineligible for an ITIN. So you got to read a little bit deeper into this one. And it actually goes back to the 2018 tax return. So returns could be amended for this back to 2018, but it's for those who are ineligible to get an ITIN. That turns out to be folks who are from Canada and from Mexico. And so there's more to it than I can share with you here. And a lot of it has to do with our federal rules on it, which I shouldn't be talking about anyway. But for California purposes, their alternative identification is allowable. And my understanding is that we do have something set up in our system, we're working on something set up for our system to make sure that folks who file amended returns will be able to do that. We'll ask them for specific information, or we'll provide guidance on that so that they can file and amend the return to get that dependent exemption credit. No, healthcare mandate. So here's something that, well, I guess we got 1 year off from it. So we have a California individual healthcare mandate. And so along with that comes some new forms. It's modeled after the federal form, and it's modeled after the federal Affordable Care Act and all the forms that went along with that. And I don't know if any of you have gone out to look at them yet. If you try to do it early, a lot of times you were seeing, well, that form's not available. Well, they are all available now, so you can see them on FTB's website if you choose to do that. So if your software is saying that maybe one of them isn't available, then it may be just that the software isn't updated yet. And if you need to look at them, they're on our website. So the 3895 does take the place of the 1095A. I can tell you that. And then we have our reconciliation form and our subsidy penalty form. So those are California only forms, but we're still using the 1095 B and C, the 1094 B and C, and we've provided some instructions on those. I may have some pictures on that coming up. If you have clients that have an exemption for the healthcare mandate, because as we know, you either have to have health insurance, have an exemption for not having health insurance, or suffer the penalty. And then unfortunately, FTB is the one who's imposing that penalty. Where we work with Covered California, and we have various exemptions identified on our website if you need that information. Covered California handles the two hardship exemptions and the religious objection exemption. So you'll have to get certification from them and then file the return with us to be able to take those exemptions. Otherwise, for FTB purposes, those will be more mechanical, something that can be figured out on the tax return. So, for example, if somebody meets a certain or is below a certain income level, and therefore they don't have health insurance, that's something that we can calculate on the return. And of course, there's more information on the website, including a penalty calculator. In order to get to the penalty calculator, you'll have to go to the tab that says personal. So this personal, business, tax professional, go to the personal, and then there's a payment calculator on there, or type in payment calculator on our search engine, it'll take you to it. So there's a little bit about that. The earned income tax credit, just wanted to point out for, again, is that new for 2020, the eligibility extends to those with a ITIN or individual taxpayer identification number. The amounts are the same as last year. So the income ceiling is 30,000. The maximum credit is 2982. And then there's the young child tax credit. I am a volunteer for the VITA program. And that is not to take business away from you, but in fact, you can share that to those, you know, somebody might be asking you to file one of these for them. You know, what I like to say is, you know, maybe they can't utilize the services that you provide for the price you need to charge. So you could guilt-free send them over to the VITA program and they can get assistance there. And they do have, my understanding this year is they'll have virtual signups and drive-throughs, so you could do that guilt-free. It's not to take business away from you, but it'll be interesting to see in the coming years, because I know they're trying to do things to expand it. You may have heard other things that they're trying to do to expand services or financial benefits to those who are in low income. So that a lot of that is tied with their earned income tax credit. Anyway, that's that. We've been asked to share with you, this is interesting, California's unclaimed property law. You know, when there's abandoned property, folks can go to the Secretary of State website and or State Controller's Office website and search and see whether they have some unclaimed property, and it's all by law and whatever. So these are slides that you should have received in the PDF form that I sent out. So I'll let you look at that at your leisure. But just take advantage if you have any questions to go to their website, or if you want to use their webinar, you can do that. If you have a client that hears about it, hey, you've got some information to share with. I also wanted to cover your just a few resources available to you. These numbers are going to get busy, but if you have something specific like the lien desk, they're much more available. And same with innocent joint filer. Those are more readily accessible. In fact, we have in our other contact information, not just the practitioner hotline, but the ID theft coordinator. So what that brings up for me is the fact that now people are going to be filing these EITC returns, they're going to be filing their early refund returns, and some of them are going to get caught up in our fraud detection. And so then we'll send out a letter that says, did you file this tax return? Or did you, we need more information. So those letters are legitimate letters. And if you need to confirm them, or your client wants to confirm them, they can just go to our website and type in notices, and they'll get a result that shows them various notices that we send out. And then, you know, our logo is going to be on there. All phone numbers should be available. Not all phone numbers, but a phone number should be available on all of our notices that we send out. And it should be at least you can respond by fax, or you can respond by phone. If you have questions, that's what you should do. Or if your client calls you and says, hey, I got this, you can tell them that there will be a phone number on that. And then, of course, you can go to our website. Or if they have questions, or you have questions about ID theft for your client, you can contact that phone number, and then there's a fax number that they'll give you if you need to send in an affidavit. Other phone numbers, if you have questions about e-file, or you have to change a payment, cancel a payment, and then reschedule it, you can always, you know, reschedule, but you can call that e-file help desk and they can help you out with the cancellation. Usually takes a couple of days to get the cancellation done. If you've got budding clients who want to go from one form of business to another, say from a sole proprietor to a partnership to an LLC or something of that nature, have them call our small business liaison and ask about it. We've got somebody who mans that phone and can help out with that. Again, we have the FTB advocate email address, our Speakers Bureau address, and if nothing else, we have our directory. And that's, you can go online, type in directory. It's probably the fourth result, but what you'll notice is our legal staff have their phone numbers for anybody who's like a manager or a supervisor or over a particular program. They're accessible. And we also have our management staff at FTB. Their phone numbers are in there. And then we have our other directories that have like the lien desk, what probably will be important for some of you is our non-wage withholding or withholding compliance section phone number. Those numbers, many of them are much more accessible than the practitioner hotline or or our collections telephone line numbers, and certainly more available than our general customer service telephone numbers. So with that, I am done. I can open it up to questions if you like. I'm going to see if I can, I don't know how if I have to make somebody else the host, or do I just sign this thing off? So I think, Bradford, you're going to have to step in here and guide me to it.
Okay,
And
I can take
while
back.
somebody has questions, they can.
Yeah, I can take back the hosting right now. Hold on, please.
Okay.
Okay, yeah, well, yeah. So, who is the host now? Bradford, please. Who are you? The host now?
Not yet. Hold on, I'm taking it back. Hold on, please.
Thank you.
So in the meantime, any questions?
I'm the host now. I got a question, Mark.
Mm-hmm.
Yeah, if an individual has outstanding state tax liability and he has or she has a garnishment order with COVID happening right now, can he or she get an exemption or a stop order for the garnishment?
They would have to go through the hardship
Hardship. Okay.
program to do that.
Okay.
If they're on a payment arrangement, they may be able to call and lower that payment arrangement.
Okay.
But if it's a garnishment, it might be a little bit more difficult, but they do modify them. So
Okay.
that's something you can ask for.
Okay. The first step is to contact them, right?
Yeah, always. Never
Okay.
want to let, you know, that our correspondence never ripens, it rots. So it just gets worse if people leave it alone.
Okay. All right. Any other question from the group or from the audience or from you, Bradford? Otherwise, that's it.
Okie doke.
Okay. All right.
That's it.
So,
Thank you, Mark.
Good luck to you all, and happy tax season. So
all
long.
right. Thank you,
Thank
Mark.
you, Mark.
So, on behalf of PICPA California chapter and the in cooperation with PICPA Global Monthly Webinar Task Force members with PICPA California chapters members and officers as well. You've been very supportive to our organization. We really appreciate that, especially this. It's already past your working time, and guess what? You're still here. We appreciate it. So thank you for your time, Mark. And just for the information of you, Mark, and everyone, if you still have some other questions regarding franchise tax board, state of California, for Mark, please feel free to email it to me at picpaglobal@yahoo.com, and I'll be happy to forward it to Mark so that he will be able to have any, but maybe after this meeting or after quite some time, you will be able to have some questions, especially April 15 is not done. Please feel free to send me an email, picpaglobal@yahoo.com. I repeat, picpaglobal@yahoo.com, and I'll be happy to forward it to Mark Narleski. So thank you, Mark. Another thing, housekeeping. Those of you, this is for everyone, the audience.
Magaling nga siya umarte.
We shall not be able to send you
Magaling nga siya.
certificate of attendance unless
Siya
we get
umarte.
your email address. So please
Panood
send
ko
us
yung
your email address.
ginawa niya
After this webinar, we can
saka yung
email address mentioned earlier, picpaglobal@yahoo.com, so that you will be assured of receiving your certificate of
tama
attendance.
niya.
Okay, so right now it's 7 p.m. as scheduled. So I would like to call on our next the person who will introduce our next guest speaker. Let me call on my idol, Mr. Rene Bergonia from PICPA, Maryland, Washington, D.C., Virginia chapter. And but now he is based in New Jersey. Okay, Idol Rene, please, you're on. Please introduce our next guest.
Okay, thank you so much. Yeah, I'm actually pleased and honored to present to you our second guest speaker. She is a IRS senior stakeholder liaison and is a relationship manager for tax professional in payroll organizations, industry, small business, and trade associations. She also works in conjunction with other federal, state, and local government agencies. This position enables her to connect people with the IRS policy, practice, and procedural information they need to help them voluntarily comply with federal tax law matters for a properly filing and paying. She began her career with the Internal Revenue Service in 2004, and during her 16 years, she held several positions in field exam, small business, self-employed examination, and she was a revenue agent, on-the-job instructor, coordinator, acting group manager, and classroom instructor. As a senior stakeholder liaison of the IRS, she speaks at organization meetings, conferences, seminars, and workshops, both face-to-face and virtually, on tax-related topics that are relevant to the given tax professionals or small business audience. Without much further ado, it is my honor to present to you our second guest speaker, Miss Susan Du. Take it away, Susan.
Thank you very much. Okay,
You're welcome.
thank you. I can't share yet, Brad, because I'm not the host. You disabled it. I think if you can enable the sharing, then I can share it without you changing the host, by the way, Brad.
Okay, hold on, please.
While Brad's doing that, I was just going to say is that for a lot of the stuff that I actually cover a lot of times in the meetings, you know, you wouldn't get CE credit, but there is actually various videos of webinars that the IRS has put out, and it is located on IRS videos, one word, .gov. So it's IRSVIDEOS.gov if you ever want to like review any webinars on various topics. There is various, there's actually a lot of videos out there. Sometimes we put out a couple per month. So if that's a place to search. Am I a host yet?
Yes, Susan, you're the host already. Sorry.
Okay, I wasn't sure.
All right. Yes.
I can't, it says I'm not a host because I can't share still. Am I host?
I think I already made you host.
No, it says you're host still on my screen.
Okay, hold on. Let me double check again. Hold on. Sorry.
Okay, I'm the host now, and that was a really loud sound. Hold on, let me.
So you're on, Susan?
Yes, I am. I have to.
Bradford,
1 second.
Yes, Renee.
can you please mute all those who are not in mute
Okay.
mode?
Okay.
All right. You're on, Susan.
Yes. Okay. So today I'm actually going to be covering tax law changes, but it's actually from a tax forms perspective. But before I actually really get into things, I just kind of want to like touch on some key messages that IRS wants to kind of share out there. This could be for your business and or just for people in general, so that you may be aware of and you could just share the information with them. So I don't, the COVID's still around. Paper filing may cause delays. We kind of push for do the electronic. Is not mandated, but it's heavy. As a practitioner, you actually file electronically. But if you know somebody else, electronic filing and choosing direct deposit is the quickest way to get any refund that you're owed. It is safe. Most refunds are within 21 days. However, that is the old norm, and with COVID going on and the processing, various campuses are closed and shut down, and or things happening. There is a lot of delays. One thing we've noticed, and we have been hearing from practitioners and the public regarding getting various notices about either returns that weren't filed, but that you filed it, or your payments that went through but didn't get posted, stuff like that. IRS is still working on processing stuff. So there are notices that have gone out. Actually, I just checked this today. Actually, there was actually a notice, there was actually a posting on IRS.gov regarding the CP59 notices. And that, because that was one of the concerns was, and that has a notice about talking about how some of it went out even though a return was filed. And so the notice is posted on IRS regarding, disregard if you actually did file the return, but we are sending notice that you did not file. But there is a delay still in processing some stuff. So that there's also the recovery rebate. I just want to point it out in the start. I'm going to touch about it a little bit later too. But for so some people got the economic impact payments, EIP. Some people got both, or they got some, but they don't think it's enough. What they need to do is they're going to have to claim the amount as a recovery rebate credit on their 2020 tax returns. And the key thing is that to get the credit, the recovery rebate credit, you actually have to file a return, even if you're not normally required to. you can't get the credit if there's no return process with IRS. The earned income tax credit, they can elect to use the 2019 earned income figure to calculate the EITC if the 2019 earned income is more than the 2020 earned income. And I'm not sure if people, most of you guys should be aware of it, but some other people that you might not, that may not be aware of is unemployment benefits are taxable, and that they should be watching out for the 1099-Gs that came in, with COVID. A lot of things happened this year. Some people might be getting unemployment benefits that they previously weren't. Some states actually have it so that you actually can visit the state website, the unemployment website, to pull out and get information regarding 1099-G. I do not know about that. That's just something that we were told that is something that can be done for various states. But for today, we're going to be talking about the highlights of tax changes from the forms perspective. So as I mentioned, COVID happened. It's still happening. Last year's filing season was chaotic. It was crazy. Everything was just everywhere. So even if, it impacted everyone in one way or another. But there was actually a lot of tax law changes that affected the filing season, and then the returns, the tax products, and there was a lot of changes to it because of the different tax law changes. Okay. So today, we're actually going to be covering a couple of different major things. Is the knowledge of the major income tax changes for 2020, the changes from 19 to 20, and then the new tax forms that happened in 2020, for 2020. The reason why we're kind of touching this as from a tax form perspective, because if you think about it, is most general public don't, they don't read and understand a lot of tax law, but how they see the tax law changes is on forms that the IRS generates and creates. Sorry, I had to admit somebody. So the thing is those tax form is how the public actually sees the IRS and the tax law changes. So it becomes a question of they can ask the question like, what does it mean for me? What's happening? That the tax form is kind of like the physical concrete process of the tax law that's happening. So when a tax law change is implemented, a lot of times you will see it somewhere on the tax return or changes to the tax forms that you see. Sorry, more people coming in, sorry. So a lot of times is when tax law changes happen, we have to make some changes to the forms. It's not something that happens overnight, but it's something an ongoing process. So what happens is we actually have what we call the draft forms. So on irs.gov/draft forms, which is actually on the slide, which I thought it's not. Sorry, it didn't, the slide didn't move. But on that IRS link, it actually posts all the draft forms of various IRS tax forms as it's going to be in the process of consideration for finalization. So if you guys are you guys ever think about, you guys got a form and says, what the heck is this IRS tax form? I don't understand it. I don't understand why they did this or why they did that. IRS actually puts these draft forms out there for you guys, for the public to raise questions and pose comments or feedback. We do, not me personally, but IRS does look into those feedback and comments and suggestions that people put in there to improve upon the forms or make changes to the forms and whatnot. Where you can put there is. On the second bullet, it talks about the irs.gov/form changes. And that's where you can see some of the changes that are made. Okay. So first, so I'm just moving on. We're going to talk about the actual changes in tax law. First up is the Public Law 116/94, which is the Further Consolidated Appropriations Act for 2020. It was actually enacted in December of 2019 and included 3 divisions with over 70 tax law provisions, including extenders, disaster relief, and the numerous changes to retirement. Not only did it affected the 2021, but it also affected the 2020 filing season, where the tax products were changed and impacted. Okay. But also, we actually updated 2019 tax products that were also affected by the legislation. Also in March 18, 2020, the Family's First Coronavirus Response Act, otherwise known as FFCRA, and yes, IRS has so many acronyms. I don't know why they make some of these laws and whatnot so long. Was signed into law. It required that certain employers provide employees with paid sick leave or expanded family and medical leave for specific reasons related to COVID-19. It also provided employers with refundable tax credits to cover the cost of providing the leave. Also, in March 27th of 2020, the president signed the Coronavirus Aid, Relief, and Economic Security Act, which is also known as the CARES Act. It included various tax items and for individuals and businesses. The individuals ones include stuff like the recovery rebate, retirement plan relief, and above the line deductions for up to $300 for charitable contributions. On the business side, the CARES Act provided eligible employers with employee retention credit, payroll tax deferral, and the carryback of the net operating loss. The Consolidated Appropriations Act of 2021 was signed in December 27th of 2020 at the end of the year. So when all these laws pass, the first thing we have to do is, start updating forms, instructions, and publications, because that's what matters to the general public. Because all these tax laws can happen, but how does it impact them is going to be shown on the forms that we have out there. Okay. As mentioned earlier, the PL's 11694, it was enacted in December 2019 of 2019. It included the 3 provisions with over extensions for more than 30 expired provisions. Also, it actually included what we call the Secure Act, which is acronym for Setting Every Community Up for Retirement Enhancement. The Secure Act is actually what contains various retirement changes. We're going to cover a little bit more on that a little bit later. There's also the change to disaster relief, which is the Taxpayer Certainty and Disaster Tax Relief Act of 2019. These are long tax laws. So regarding the Secure Act, for 2020, there's actually a Form 8881, the Credit for Small Business Pension Plan Startup Costs and Auto Enrollment. The title of the form was modified to reflect the Internal Revenue Code's section for the IRC 45T based on Division O, Section 105 of the Secure Act. The law basically increases the tax credit for the plan startup costs. The tax credit will increase the current cap from $500 to $5,000 in certain circumstances. And additionally, small business owners are eligible for a further $500 tax credit for 3 years for a plan that add auto enrollment for new employees. Also for kiddie tax, some families reported to lawmakers that the TCJA increased the tax on survivors' benefits paid to children whose parents died while serving in the U.S. Armed Forces. So as a result of the Divisions O, Section 501 of the Secure Act, they modified the rules relating to the taxation of unearned income to certain children. Specifically, it repealed the IRC Section 1J4 relating to special rules for certain children with unearned income, basically eliminating the taxation of the unearned income of children at rates applicable to trusts and estates. The provision generally applies to tax years beginning December 31st, 2019, but the legislation provided kiddie tax taxpayers the option to also apply retroactively to tax years beginning 18, 19, or both. As a result, instead of updating 8615 for tax years 18 and 19, There's a modification of the instructions for both years, which added a worksheet so they can do the tentative tax rates for the parents to be used when figuring out the kitty tax. For 2020, the Form 8615 was actually going to be reverting back to before the TCJA Act version. So basically, you know how at one point it changed, it kind of flipped it backwards. Retirement savings, pensions, provisions, distributions, changes. There's actually a lot of them. So like the IRA. So beginning at end of December 31st, 19, it repealed the maximum age for allowing contributions for traditional IRAs. The provision allowed working individuals to continue making contributions to the IRA past the age of 70 and a half. Also moving the required minimum distribution age from 70 and a half to 72. There was also the shortening of the distribution period for non-spouse inherited IRA from 10 years maximum. So the non-spouse designated beneficiaries of an IRA, with some exceptions, which, it's case by case, would generally be required to take distributions over 10 years instead of the designated beneficiary's lifetime. Some 401k changes, requiring plans to offer participation to long-term part-time employees, permitting plans to adopt qualified birth or adoption distributions, encouraging auto-enrollment by increasing the cap to 15%, adding new tax credits for small employers using the auto-enrollment plan, the Form 8881, and streamlining the safe harbor for non-elected contributions. Okay. So the Tax Certainty and Disaster Tax Relief Act included a lot of extenders, business, disaster relief. And so, sorry, I lost what page I was on. Okay, so as far as the individual extenders go, so here are some highlights on about what's going on. The exclusion of the qualified principal residence indebtedness from gross income through 2020. Mortgage interest premiums are treated as deductible qualified residence interest. The adjusted gross income floor for medical and dental deductions was reduced from 10% to 7.5%. Also, the above the line deductions for qualified tuition and fees was extended for calendar year 18, 19, and 20. Okay. The legislation also provided disaster area general, The relief includes removing the requirement that taxpayers itemize to claim the disaster deduction. Am I reading that right? Refunds. I'm not sure on that one. Forgiveness of early withdrawal penalties for qualified disaster distributions from retirement plans, allowing recontributions of amounts withdrawn for a retirement plan for a home purchased or construction that wasn't purchased or constructed because of the qualified disaster. And with respect to the loans from qualified plans, suspending repayments and increasing the amount available for a planned loan. Notably, the employee retention credit is also allowed for employers in affected areas, as well as special casualty loss rules for affected area. This employee retention credit is not to be confused with the other new employee retention credit available under the CARES Act, impacted for the COVID-19. The relief is essentially the same as invariably provided in the wake of a major disaster, like hurricanes and wildfires. However, the relief does not the relief applies to all 2018 and 19 major disasters, except for the California wildfire disaster areas, for which the relief had already been provided under the Bipartisan Budget Act of 2018. Okay. So as you can see from the slide, both the CARES Act and the Families First Coronavirus Response Act provide significant relief to stimulate the economy. It has the deferral of payments of employment taxes for employers and self-employed, sick and family leave credits, an additional $300 for contributions above the line, and the recovery rebate credit. We also want to mention that people who were unemployed due to the coronavirus received an extra $600 per week in unemployment benefits. This was part of the Public Law 11694. As I mentioned, unemployment benefits are taxable. The reason why we're stressing that is that I think a lot of people may not be getting that in the past and do not realize it, and do not realize that they do actually have to report it. So they're both the regular unemployment plus the additional, all of it actually are taxable. I also want to just kind of raise up the point at this point, because it's in my head now, is the withholding. So with COVID happening last year, a lot of people may have changed the withholding amounts and whatnot. So they withheld less, but we always tell people, like, they should be checking their withholding amounts every, like for me, throughout the year, to make sure that they're actually withholding enough, so then they actually do not owe, they don't want to get a sticker shock from the IRS saying, you owe so much, but it's because they didn't withhold enough, and they could actually get penalties for not withholding enough throughout the year. So as a reminder, just kind of throw it out there to who you talk to is, have they checked on the withholdings to make sure that they have enough. Okay. Sorry. So we're going to talk a little bit about the employment tax payments on this side. So the CARES Act deferred the deposit and payments of certain payroll taxes. The deposit and payment were due at the period date beginning, deposits and payments of payroll taxes due from the period beginning of when the CARES Act was signed, which was March 27th of 2020, and ending December 31st, were deferred. So the 6.2% of old age survivors and the disability insurance incurred by employers, and the 50% of the Social Security tax incurred by self-employed persons qualify for the deferral. So 1/2 of the eligible deferred amount is due December 31st, 2021, and the remainder is due the 31st of the 2022. So, but keep in mind that if you make a deposit before December 31st, 2021, it will always be applied first to the December 31st, 2021, and then whatever remainder and will be applied for the December 31st, 2022. The deferred payment amount is actually figured on an employment tax return, the 941s, or it could be on the 1040 for Schedule H, or Part 3 for the new SE schedule. So the Families First Coronavirus Response Act required that certain employers provide their employees with paid sick and expanded family medical leave for the specific reason of COVID-19. And it also provided the employers with the refundable tax credits for providing that paid leave. So the employers actually can claim these credits on their employment tax return, while self-employed individuals can claim this on their individual tax returns. So self-employed individuals can calculate their credits using the new form 7202. And we're going to talk about briefly later in a bit. This also applies to certain household employers. So Schedule H, which is the 1040, the household employment tax, it was actually revised a lot for the 2020 to report for qualified sick and family leave wages, as well as the deferral of any employer share of the Social Security tax, which we just talked about. Okay, so the new form 7202 is called the Credits for Sick Leave and Family Leave for Certain Self-Employed Individuals. It was created so that we could calculate these credits. So on Part 1, there's a lot of forms. When you pull them up, it'll make a little bit some more sense. Part 1, the new forms, it's for the sick leave. Part 2 talks about for the family leave credit. And so the 2 credits will be included on this Schedule 3. And the 7202 is filed separately for each taxpayer with net self-employment tax. So if you have a joint return, it was actually 2 separate 7202s that needs to be attached. Okay, so there's actually those changes to the SE Schedule 2, Schedule SE. So basically we removed the short version of the Schedule SE, and so that all filers now need to use the method of calculating SE found in Part 1. And as a result, SE will no longer allow you to have joint return filers to use a single SE. Each spouse actually has to complete their own separately SEs, Schedule SEs. And there's actually an added new Part 3, which allows for the filers to figure out the maximum amount of self-employment tax that may be deferred. Okay, so here is the two parts of the law for the PL 116-260, which is basically COVID-related tax relief, and also the certain taxpayer certainty and disaster tax relief act. That one actually doesn't, I don't think has an acronym for that one. Okay, so these are just, I mean, it's on the slide. I mean, it's a lot of information, but these are just like, I will provide, I had to double check, but I thought I provided, but I may have not actually sent it. I'll send the copies of the slides so that Roland can distribute it out. But here's more detail regarding the COVID-related tax relief act. The additional 2020 recovery rebates are up to $600 per qualifying taxpayer and child. And we're going to talk about it a little bit too. The extension of the time to for repayment of certain deferred taxes through December 31st, 2021. Expansion of the above the line 250 teacher tax deductions to include the cost for personal protective equipment, PPE, and other COVID-related expenses. So it also allows for the allowance of election regarding tax treatment for certain farming losses for 18, 19, and 20. Extension of the credit for paid sick leave for paid sick and family leave, which also includes certain self-employed individuals through March 31st, 2021. Reduction of the medical expenses floor to 7.5. Increase the phase-out threshold for lifetime learning credit. Exclusion from income of certain benefits provided for volunteer firefighters and emergency responders. Exclusion from income, the discharge of principal residence indebtedness, exclusion of certain employer payments for student loans, residential energy efficient property credits with addition of rules for inclusion of biomass fuel properly. Okay, so for EITC and ACTC, taxpayers may elect to use the prior year's earned income, which is PYEI. So if you see that new acronym, that's what it means, the prior year earned income, to figure the EITC or the ACTC. So the past legislation only allowed for certain individuals who were impacted by specific disasters to use the PYEI to figure the EIC and ACT. But because of PL 116-260, it allows for all taxpayers to use the prior year earned income to use to figure their EIC and ACTC. But the key factor is that it has to be more, the prior years actually has to be more than the current year. So the 2019 amount needs to be greater than the 2020 amount of earned income. So extension and increase of the CARES Act non-itemizer charitable contributions, deductions for certain contributions for through 2021, up to $600 for married filing jointly couples, and for non-filers, non-married or married filing separate, it will be 300. There's also extensions for the CARES Act for the modification of donor percentage of income limitations for certain charitable contributions through 2021. And then there's also the exception to the 10% early retirement plan withdrawal penalties for qualifying disasters relief distributions is not to exceed 100,000. They removed the requirement that personal casualty loss must exceed 10% of AGI. Okay. So sorry, I switched between screens and I just lost track of where I was at. Okay, sorry. Okay, so now we're going to kind of talk about some changes to the tax forms and for 2020. So these are like, when you see them, I mean, there was a logic to why the changes were made the way they were made. One thing was, I guess there was some confusion, but so what happened is that we actually removed the third-party designee checkbox inside the paid preparer section. So it's now only on the third-party designee, and there is no box inside the paid preparer section. I guess so. Originally we put it there so then you could mark that the paid preparer was also the third-party designee, but I think there was too much confusion on that. There's also added a question that was moved from Schedule 1 to the 1040, which is the virtual currency question. It's actually underneath the presidential election campaign box. And it's actually shown both on the 1040 and the 1040 SR. The estimated tax payments. This is very important. It actually is now on the actual 1040 because I guess there was some confusion about where it was when it was on other schedules for 18 and 19. So it's been moved from the attached schedules and now placed on the actual 1040. They also included the new line for above the line charitable contribution deductions. It now reads, it's under the adjustments to income. It's on line 10A. Also, the recovery rebate is actually showing on line 31. That's a newly added. There's actually a worksheet to, I always tell people to like look at the worksheet so you can see the flow of what the, what's going on. Also for the withholdings, it actually breaks out on line 25, like, so it reflects 25A as the forms for with the withholding that you got from W-2s, 25B shows it from 1099s, 25C shows it from others, and then the 25D just is a combination of A through C. So it breaks it out a little bit more, so then you can follow along where the withholding came from. These are not true questions, but this is just kind of leading on. But can someone who filed a 1040 SR, a U.S. tax return for seniors, can they itemize? Think about it. Well, actually, yes, they can. So taxpayers who are over 65 can file a Form 1040 SR and can itemize. Basically, it's the same form as the 1040. It's just they use the same instruction schedules and forms and attachments. It's just that there's some changes to how it's formatted. So then the visualization of the form itself is what is the major change. Okay. As a quick reference, because of the Bipartisan Budget Act of 2018, it required the IRS to actually create a form for seniors. So basically, taxpayers over 65 can use the form. I mean, they don't have to. They can actually use the regular 1040 forms if they prefer to use that. But it allows for them to use the 1040 SR. They don't have to be retired. But the thing is if it's all through the computers, all through electronic, they wouldn't really see much of a difference. But if you actually print it out, you will see the difference on like how it's formatted, how long the pages are and whatnot. Okay, so random, like just kind of leading questions is what was the last year in which we actually had a recovery rebate credit? I mean, IRS uses a lot of terms for a lot of things, but we do kind of recycle the terminology. But we actually had the recovery rebate credit actually in 2018. Sorry, 2008. Because what happens is we actually had the economic stimulus payment in 2007, and those who did not get it in 2007 were or thought they should be getting the payment in 2007 but didn't get it, were able to claim the recovery rebate credit in 2008. So as in 2008, for those people who, what we call the current, there's a lot of different names, but it's basically the economic impact payments, which we call EAP or EIP. There was actually the CARES Act allowed for the recovery rebates, which was, so there was actually two so far, which is the EIP 1. It started out being issued out like April of 2020, and it kind of went through throughout the year. I know there was a lot of hiccups, so like some people weren't getting it timely, some people got it late, so there was a lot of issues. But the good thing is we did get a lot of the payments out, and then when we rolled on to EIP 2, we were able to, because of all of the corrections and some fixings that were done for EIP 1, we were able to address and send out, EIP 2 a lot smoother. That was actually starting in December 29th of 2020, and it actually continued into January of 2021. But those who did not get the full EIP 1 or EIP 2, or think that they did not get it, or they did not think they got the full amount that they should have gotten, they actually had to file the recovery rebate, RRC, on the 2020 tax return. So they actually had to claim the credit on their line 30 of the 1040 SR, whatever form. And then there's actually a worksheet to figure out the credit and determination. So your clients actually, you yourself and your client, if you guys got to get the EIP, you guys should have gotten a notice 1444 for the EIP 1, and for EIP 2, you should have gotten or will be getting a notice 1444-B. I know as of January 20th, it wasn't issued yet. So, the notices are supposed to be issued. You should be getting a notice regarding how much the payments, how much was paid out, what method it was, like it was a direct deposit, it was a check payment or whatnot, and how to report if payment was not received, even though you got the notice. So one thing to note is that the EIP, the EAP, the economic impact payments, were actually based on either the 19 or the 18, depending on the timing. So like for the first one, it would have been based on 19. If 19 was not filed or processed at the time of the calculation of the EIP, then it would have used 18. But for the EIP 2, it was used off the 2019. So there could have been a difference between some people's EIP from EIP 1 to EIP 2, meaning that they qualify for one year but not the other, is because of the change of which return year was used in the calculation of the EIP. I do want to point out that so if for Form 1040s, it will not require the repayment of EIP for instances in which the information is based upon the basically if a taxpayer is no longer qualified for the EIP based upon the 2020 return, say like if their income threshold went up above it or whatnot, or the child is now older than 17, and so that makes them ineligible for the EIP, it will not make it so that they would have to pay back the EIP for the 2020 return. Meaning that so if you got the EIP, and then your AGI or your child went up above the age limit, you're not going to have to repay that EIP. You just won't get any RRC. Okay, so notable changes on the 1040 is let's start with Schedule 1. So there used to be like 6 schedules when we first created the new process of the 2018 returns. We got so many comments and complaints about the number of schedules and how many pages it comes out to. So in 2019, you know, we reduced it, and now even in 2020, we reduced it even more. So now there's basically 3. Okay, so on schedule 3, has like a lot of the extra things that we've been talking about. It has the qualified sick and family leave credits for certain individuals. It also for the age, and the new form 7202. It also adds the line 12E, which is used for taxpayers that have the Schedule H or SE, and where they can defer their Social Security tax. The line 12F is just a combination, combining all of lines 12A through 12E. They also removed the estimated tax payment, which I talked earlier about. It moved it from Schedule 3 to the face of the 1040. So then because there was complaints about it being buried and people couldn't locate where to put the information regarding estimated tax payments. Did I move too far? Okay, sorry. I don't know. I was slipping whether or not I was moving the thing forward or not. Okay. As part of the 1040 redesign efforts, the Form 1040 NR was also redesigned and to look more like the 1040, providing the same line numbers and the schedules of 1 through 3. So in 2020, they actually have the 3 Schedule A, which is the itemized, Schedule NEC, which is the tax on income not effectively connected with U.S. trade or business, and also the Schedule OI, which it has collects information to determine eligibility of certain tax benefits. The short form, basically, of the 1040 NR, the 1040 NR EZ, basically has been retired beginning of 2020. Okay, so for LEP, this question is, Schedule LEP is a request of change of the language of preference be filed by itself, apart from the 1040 series of returns. So the new schedule LEP requesting for language preference is you can't actually submit it separately. It actually has to be included and attached with actual 1040 when they file. So what is the schedule? Sorry, I lost what page I am on. There you go. Sorry. Okay, so what is the LEP form? It is basically for effective a 2020 tax year is so taxpayers can put the preference of receiving written communications from the IRS. The form actually includes like the top 20 limited English proficiency languages, I mean, it's not inclusive, but we try our best to include as many as we can. Keep in mind with budgets, we don't necessarily can translate all documents into every possible language that is spoken or written in the United States. So a couple of key things is that it now has been, the wording has been changed now, so it clearly indicates that it says it's to be attached to 1040, 1040 SR, 1040 NR, 1040, whatever form, 1040. The name line and social security number of a spouse is now removed. So if you actually have a language preference for each of the spouse, each one actually has to have 2 forms, one for each of the spouse. So, and then also the address, because it's being attached, all the address lines has been removed. It basically now only has one major question, which is which of the language would you like to have the documentation in. There's some switching around of like the ordering of the languages, but one thing to note is like they kind of changed some of the quote unquote names of the languages, because before it used to have like this or that, like it used to say like Filipino or Tagalog. Now is this just as Tagalog, or is this Parisian or Iranian, and now it just says Farsi, stuff like that. There's no signature lines or dates or any of that because it's being attached now. So it's just it's more simple, the schedule LEP. But I do want to point out that you know, IRS, if it is submitted and processed, IRS will try to send out what documents they can in the language of preference, but it actually has to have been a translated document. So we can't send out stuff that is not translated. It would just automatically be the default English. But keep in mind, if there is a request to have it be sent in a preferred language, you will also still get the English version as a reference. Okay. One more question. Can Form 1040X be e-filed for 2019 return if the original 2019 return was not e-filed? Question? No. No. So what happens is you can't. So if e-filed amended returns will be accepted if the original 2019 return was also electronically filed. That's kind of important to know down the line. But you can't really change the past, because if you filed by paper, you have to still process it by paper. But if you did have to amend a 2019 and it was electronically filed, you will be able to do it electronically, which is a good thing. So e-filing for changes. So a lot of people, this has been requested for years and years, especially when we push to have more electronic filings. We are, especially with COVID hitting, it is now, I guess, the software, there's been a great push to have it where we are able to do amended returns now electronically through the software products. Like I said, major change, but the key thing is that the prior year return does actually have to have originally been filed as electronic return, so that it can match up. Because if it was a paper, you can't try to do an electronic filing of a 1040 because it was paper. So a paper must, at this point, you still can, I mean, if you did electronic filing for 2019 and you want to still do paper amended returns, you still can. But the electronic kind of helps with some of the correct, we're hoping to correct some of the input errors of completing it on paper for processing purposes. Okay, so I mean, we're gonna, the rest of it is just like some kind of goes over kind of what we talked about, but all the different new products out there. You know, we talked about the LEP form, the 7202, we touched upon that. It talks about the 8915. That is something, it's still in the works. I'm not sure if it's been completely finalized regarding some of the stuff that was up in the air. Because I know at the end of last year, they were still trying to finalize some part of the legislation, finalize it a little bit. It also mentions about the Schedule A and NEC and OI for the Form 1040NR. And there's a lot of, you know, the Spanish products. That's the most common language that has been translated. But we are working on having more service-wide multilingual, especially with our commissioner being to try to reach out to the multilingual and underserved communities and whatnot. I do want to throw out there that we do actually have a cadre of non-IRS employees that, like basically some like practitioners and or like some of our other industry partners are, they work with us voluntarily to like help us translate certain information so that it can be sent out more to the public, to the general public, and get more information, because IRS does not have the budget to translate every single document, every information release, like such as tweets and whatnot. But I mean, there are some, if anyone's really interested, I mean, I could try to, if you let me know, I could try to, I can pass your name along to the cadre to see if there's a need for the language that you have or are able to translate to, whether or not we can use your assistance or not on that. That's my little plug for the IRS there. But here's all the things, it's all translated now in Spanish. Okay. Okay. One thing about the 1099 NEC, I guess for those who practice a long time, I guess I didn't realize this, but it was actually previously used back in like 1979, 1982, and so they kind of restored that and updated it to the current usage that it's going to be used. One thing is that it removed it from the so basically the non-employee compensation. It moves it out. So there's actually two different due dates because before they automatically did extension. So the NACs are due the January 31st, and all the 1099 miscellaneous are on February 28th. Because this became an issue where there was a confusion about like which forms and whatnot, processing, how to separate and all that. And this last one just has all the various kind of like IRS web pages that I kind of touched upon regarding different forms and where you can pull it from. I do, like I said in the beginning, before we started off, the IRS videos with S portal, sorry, irsvideos.gov is a portal. IRS is the IRS video portal that actually houses a lot of the various webinars that are recorded. Some of it could be on like specific things. I know like there's opportunity zones, there's various things. You can go there, look it up. So if you ever attend a live IRS webinar, usually a lot of those can be received CE credits. But if you actually if you just review it from the video portal, you won't get CE credits for that. But if you just want the information, it is on there, so you can always go there to look at it. And that is the end of my presentation. That was a lot of information. I will send out the PowerPoint, the slides, so then you can refer to it, because a lot of the information I covered is on the actual slide itself, so you can just read it again to refamiliarize yourself. Anything else? Do I have to send it back to you, or are you going to pull it back yourself, Brad?
Susan,
yes.
I'm not sure if you're able to see one question about an employee from Ron Mason Holder.
Yeah, sorry, I couldn't see it when I was in the display mode. So when you guys try to do the chat, I can't see it when I'm doing the sharing. Okay, so if an employee lost wages due to their company shutting its store and it was impossible to recover the labor commission or collections, is there any credits allowed by the IRS?
All right, so what can you say about that?
So basically, is the question more like, so they were working, they're due wages, but then the business shut down, so then now they never got to actually collect the amount, but then the W-2 that they got reflected the full amount? Because I'm like, it really depends on the case by case on this.
No, this is Ron. Okay. Susan, yes. No, the W-2 would not reflect the missed wages.
So I'm not exactly sure what the question is then. So we covered I guess what type of?
Well, like in the case of a theft, it's obvious that, or a business loss, you can take some kind of credit against income, but in the case of lost wages, there's no way to, there's no credit available for that. sort of thing, correct?
To my knowledge at this point, I would say no, there isn't. Because there is a lot of there. Some of it you can, but on this one, I don't think we actually have anything specifically set up. But I will actually still look into it to see if there's something maybe was implemented recently because of the changes, with COVID and what's going on. A lot of businesses did end up shutting down, because of COVID and what happened. So I can look into it and see, and then get back to Roland with the answer if I can get an answer one way or the other, and then he get
Yes,
back to you.
yes, please.
Yeah.
Then I'll be happy to forward your response to
Ron.
to Ron. Yeah, actually, Ron.
Did he want to add
was-
something?
Not me.
No, I thought he was actually going to say something else. Sorry.
Oh no. Actually, I was just checking these chats because
Okay.
I understand if you are on the if you are talking,
Yes.
you are not able to look into all these chats, especially you are also sorry about that. You are also responsible to admit any late attendees or some. so,
Yes.
so yeah. So the thing here is, Ron, just to assure you, if ever I get some response from Susan, I'll be happy to forward it to you.
Yeah.
As long as I get your email address, Ron, right? Okay.
Yeah, I'll send you my email
Yeah, please.
address, Roland. Yeah, thanks.
Okay. Yeah.
I do have to put a caveat, sometimes, depending on what the questions are, sometimes there is no definitive answer. But sometimes, like, if it might be where it might be a specific case situation, but if it's, I will raise it. But I don't recognize anything off the bat, but I can bring it up to the team, my group and above, to see if there's we can address it, or maybe it's something that needs to be addressed nationally, because that's what I'm gonna do. My little plug for my IRS calls, because they actually were where people can come in and raise questions, concerns for systemic issues in IRS, so we can change procedures and whatnot to capture and fix things.
And just to make sure that we will not forget this question, Ron, may I suggest that you could really send me an email ASAP whenever you have the chance, and then I'll be happy to forward it to Susan, and we can go from there. Right?
Sounds good.
Yeah.
Thank you.
Okay. Yeah, you're welcome. Any other question from the group or from the audience before we close out? If there is none, on behalf of by the way, just want to repeat the housekeeping. I sent also those attendees tonight whom I basically don't have your email addresses, and so I'll be happy to send your certificate of attendance. Please feel free to send me your email address to picpaglobal@yahoo.com so that I can send your certificate of attendance. All right. And once again, on behalf of PICPA California chapter, San Francisco, and in cooperation with the PICPA Global free monthly webinar task force, I would like to thank Miss Susan Du from the IRS for her continued support to our organization. She very helpful and always ready to help us, even if it is past her working hours. Susan, thank you very much. You have been really helpful, and you share all your knowledge and your time as well. And this is not the last time, okay? Actually, because of this COVID, we really thought about this monthly free webinar because we cannot do the seminar until COVID is gone, all right? And we don't even know when it will be gone, all right? So please mark your calendar. Our next monthly webinar for next month will be March 19, same day, Friday, same time, 6 to 8 p.m. I will again send it by email so that everyone will still be able to next webinar. So we are open for suggestions. Maybe you might have some topics which you want to be discussed in the forthcoming other webinars in the next month or so. Please send us an email, picpaglobal@yahoo.com. Whatever topics you think it will be interested or that you really want to be discussed, we'll be happy to do that, and we'll make sure that we'll get some speakers who will be able to talk about your suggested topic. All right. So once again, if there is no other question, thank you everyone for attending our webinar for tonight or this morning from other parts of the world of the globe of the country, and make sure that let's stay healthy, and we'll see you next month, March 19, Friday, 6 to 8 p.m. Thank you very much. Bye-bye and good night.
Thank you. Salamat.
Thank you. All right. Salamat. Bye-bye. Thank you, Susan. Bye.
Bye,
Thank
Susan.
you.
Thanks, everyone.
Bye, Brad. Bye.
Bye-bye.